So let's take the semiconductor industry, for example. It's one of the most water intensive industries on a relative basis.
For the last couple of years, sustainable strategies have been getting a lot of attention from asset managers as well as investors. And as we generally know, it's more important to focus on homework before headlines. But what took Capital Group so long to roll out their ESG approach, Belinda?
As an investor focused on the long term, Capital Group is really deliberate and intentional with everything it does, and ESG is no exception to that. We've done a lot of work behind the scenes, invested significant time, effort, and resources to develop our ESG approach and build out our proprietary ESG tools. Now, it would have been easy to just buy third-party ESG ratings and just bolt that onto our existing investment process. Or, we could have also just got the ESG team to do all the work, but we didn't feel that that was the right approach for us. We wanted to build a really strong, robust process which leveraged the deep knowledge of our investment professionals across the entire firm, and to combine that with the expertise of our ESG specialists.
As I mentioned at the beginning, there's been a lot of focus and attention from asset managers as well as investors, and many different asset managers have launched new products in the topics of sustainability and ESG. So why should investors look at Capital Group for topics such as ESG?
There are a number of reasons I'd highlight. Firstly, as the world's largest active manager with a long-term investment horizon, we have unparalleled access to company management and can influence positive change on key ESG issues. Secondly, our ESG approach is proprietary, it's forward-looking, and it's investment-led. We don't just outsource our thinking. Research really is at the heart of our approach. So our investment group partnered with our ESG specialists to develop more than 30 industry-specific frameworks. These proprietary frameworks capture our views on the most material ESG issues for each industry. It covers how these issues can impact long-term value creation, what best practice looks like, and it also has some relevant ESG metrics for measurement. Thirdly, we have an experienced, very well-resourced ESG team, which is embedded within our investment group. And importantly, I think, it's led by someone who understands investing. We have 45 dedicated ESG specialists focused on research, engagement, and proxy voting. Plus, we've got another 25 data scientists and product developers focused on building and enhancing our proprietary ESG tools.
So how important is the investment perspective on ESG issues?
The investment perspective is absolutely crucial for us to be able to deliver superior long-term results for our clients. Identifying ESG risks and opportunities, both current and emerging, is important. Our ESG specialists are experts on a broad range of environmental, social, and governance topics, and their perspectives are hugely valuable, particularly on those thornier issues. But our equity and fixed income analysts, now they bring deep industry and company knowledge, which is vital for identifying companies that can really drive sustainable long-term results. Not all companies are equal when it comes to ESG, and this needs to be taken into account when we're making an investment decision. So some companies will be proactively addressing ESG issues, while others might be significantly lagging behind their peers. We need to understand how these different companies are navigating ESG trends and issues to sort those that are well positioned to sustainably grow their businesses over the long-term horizon versus those that will frankly find it more challenging.
So lastly, would you be able to share an example of how Capital Group has thought about a particular ESG topic and its impact on investments?
Yeah, sure, happy to. I think a good example of this actually is the research our ESG team recently did on water stress, one of the most pronounced physical risks of climate change that investors need to consider. As the planet continues to warm, we're seeing more frequent, severe extreme weather events. And now combining that with the increasing demand for fresh water, existing water stress and shortages will worsen in the future. That's why it's important to understand how companies within water-intensive industries are managing this risk, particularly those operating in severely water-stressed areas. So let's take the semiconductor industry, for example. It's one of the most water-intensive industries on a relative basis. In the past, several hubs where the chips have been produced have been exposed to severe long-term drought. Now, the leading companies have been able to proactively address this risk by developing new approaches to water management, whereby they can recycle 90% or more of the water that they're actually using. Now, as these companies now consume a smaller percentage of fresh water, they are less exposed to future drought and water shortages. In contrast, companies that are lagging in terms of their water management, well, they're now more exposed to the risk of water shortages, and actually, they might experience greater operational challenges, which could be detrimental financially.